Have you ever flown on an airplane using a noise cancellation headset? A lot of people in the crowd would say, yeah, we've done that. He says, aren't they just wonderful? You just get on the airplane, put the headphones on, push a button, all the noise is canceled out. He said, what your clients need is a financial noise cancellation headset.
What's going on, everybody? I'm Chris Naugle, and welcome back to the show. Today is going to be an epic episode because today we are going to dive into the infinite banking concept, the concept pioneered by the late R. Nelson Nash, the model that has changed our lives, not just mine, but also Jason's, my guest. But we're going to talk about it in a little different light. You always hear me talking about the infinite banking concept and privatized banking and all this stuff, but you hear about me talking about it in the United States of America. And I get questions all the time of people saying, I'm in Canada. Does it work up here? Of course it does. It works in North America. Unfortunately, the infinite banking concept, the product specifically, does not exist outside of North America. But the concept, the most important thing, the process called the infinite banking concept, does work no matter where you're at. These are some of the things I want to get out in today's episode. Definitely want to focus on Jason's practice, what he's doing up there in Canada. I always just call Canada my neighbors. I'm in Buffalo. It's literally, I can walk over the border and be in Canada. But the other thing I want to talk about for all of you, no matter where you're coming in from, you're going to get a lot of knowledge today. And on the knowledge you get today, it's most important, not what you get, but what you apply. You see, application of knowledge is all that's going to get you where you want to be. It's not the knowledge itself. That actually means nothing if you do nothing with it. So let me test your knowledge of application. What if I gave all of you something for free? What if I gave you my books for free? Would you take action? Would you do something about that? What if I was to give you $1,000? Would you take action? Well, I'm not giving you $1,000, but you can have my books totally free. And all you got to do is go to chrisnaugle.com, and right there, a couple index finger scrolls down, you can get my books totally free. So let's see how good you are at taking action, because this is a test to see if you want to change your life. But let's dive in. Jason, welcome to the show.
Oh, it's great to be with you. Thanks for having me. Yeah, we were chatting, we were jamming a bit before hitting the record button, and it's always good, to connect with a colleague and just be able to share some tales from the trenches, and the fact that we've been living out of suitcases and flying all over God's green earth, but first world problem, and we've taken on this responsibility of just wanting to educate the general public, and the message is really getting out there in a really positive way. And we're blessed to be able to share that in front of groups of people who invite us to come and, add value to their communities. But it does require a lot of, we were talking about, becoming an entrepreneur and pursuing more freedom of time and purpose and relationships. And boy, you get more freedom of time. All right.
It's funny. We were just talking about
waiting for the airplanes
at the gate, at the airport. Exactly. Like, that's the freedom of time we've earned ourselves. But you know what? That's what it takes to change people's lives. Yeah. And, we're in an environment right now with everything happening here in the States with the bank failures. And, I just heard about another one today. Yesterday, this Pac West Bank started, losing major ground overnight. And I had called it out. I had said, this is going to be the next one. Sure enough, there it goes. But then just today I heard of another one. So it's just like bank after bank after bank, and people are becoming numb to it because they're like, oh, the Fed's just going to bail them out. If you look at all the banks that failed in 2008 during the Great Recession, and you look at the banks that have failed now, the banks that have failed already, not including the ones I just mentioned, are far bigger than all the banks. There was over 20 banks that failed in 2008 during the Great Recession. So folks, we got a problem, and we are here to solve that problem, Jason and I, and we're going to solve it on two different grounds: the United States, and for the first time on this show, Canada. And we're going to solve it by doing one thing, and that is put all of you back in control of your money by teaching you something we learned a long time ago, and that is how you can become your own bank, applying an amazing concept that, although we wish he was still around, his legacy will live forever. The late R. Nelson Nash's book, Becoming Your Own Banker, serves as that there you go, is the one message that we keep alive. So Jason, just tell me a little bit I've heard you speak, but tell me a little bit about your background. Like, how did you land where you're at now?
Oh, wow. Before going into practice back in July of 2008, I was a senior partner with Dell. So I was in a completely different industry. I was really blessed beyond measure to lead a really wonderful team of people who love to talk about technology and work with technology. And I thought that was my lot in life. I was on a really great path with that organization. And my wife, Rebecca, and I got pregnant with our firstborn. We were living and working in Tampa, Florida at that time. I was on an international work assignment. And of course, when, you relocate, you make new acquaintances, you establish, new friendships. And so one of my friends who I had met while living in the US, his name was Matt Lovelady. And he reached out to me shortly after getting back to Canada. And he said, hey, we're going to go to this conference. We're going to go learn about this process of becoming your own banker. And I had no earthly idea what that was. But Matt at that time, and still is today, a very successful entrepreneur, and him and I just had chemistry. We really got along well. And he said, look, come on down to this conference. What's the worst that can happen? We spend 3 days together getting caught up. We learned something new. And so I did. I attended. And I was not licensed in the industry. I had no ambition to be licensed in the industry at that time. But everything that I heard, I caught. And that's something that, Nelson used to say to us so often. He said, this message is more caught than it is taught. And I definitely caught it and came back to Canada. There were 2 Canadians in attendance at that conference. There were north of 300 plus life licensed advisors at this conference. And when I came back to Canada, we spent the better part of several months meeting with all of the life insurance companies who were distributing participating dividend paying whole life insurance contracts. And we were asking them a laundry list of questions to trust but verify. Can we actually utilize this tool in such a way? And for the most part, the home offices were like, oh, we're going to need to get back to you on that. Nobody's ever asked us that question. Let us find out for you. And then the boxes started to be checked. So I began to implement it on my life personally. And I was really aggressive when I first got started because I wanted to get rid of the conventional bank as it related to this mortgage that we had on our principal residence. And in April of 2008, before I was even introduced to the process, we had signed off on a 40-year amortization schedule on our mortgage. You could still get 40-year amortizations back then. And the mortgage was just north of $420,000. And I got pretty aggressive. I said, I want to get rid of this mortgage as rapidly as possible. And through the implementation of the process, it took us 7 years to achieve that objective. And in hindsight, I would have done it differently. I would have kept more loan amount available to take advantage of opportunities of very high caliber. But that was my objective. It belonged to me and I achieved it. And Nelson was the first person I called. And I'll never forget that conversation for the rest of my lifetime. I said, Nelson, you're not going to believe it. We did it. He says, you did what? I said, well, we got rid of the conventional bank. And he said, well, don't celebrate too quickly, son. He said, you signed on for a 40-year amortization schedule to transfer all that financial energy to someone else's system. So you need to be an honest banker and you've got to finish your original loan schedule. You're just going to change the process of where the money's flowing to. That's the matter here. It's not a matter of interest rates. It's not a function of rates. It's a matter of where the money's flowing to. And so that really clicked for me in that moment because he said, I want you to always remember that because you're going to have so many clients who go through the same experience and they're going to look you up as the first person to call to celebrate that good news and make sure you transfer that very same message that you've got to finish your original loan schedule. And I'll never forget it to this day. But I didn't meet Nelson until a few years into my journey with the process. And when I met him, it was at a conference in Detroit. And I walked into the room and I introduced myself to him. And he said, "Oh, where are you from?" I said, "Oh, I'm from Edmonton, Alberta, Canada." And we had already had a conversation for a few minutes leading up to his question of "Where are you from?" And when I told him, he said, "Wow." In his Southern drawl, he said, "I'm surprised you all can speak American." I'll never, ever forget that. And, we clicked. And I think about him. He's right next to me, in my office each and every day. And I miss him a lot. I was blessed beyond the definition of good fortune to have spent so much time with him. And most recently becoming an advisor to the board of the Nelson Nash Institute. I'm a big advocate for the advisor community to attract more great people into the authorized infinite banking practitioner program. And it's one of the greatest honors of my life to have been invited to take on this new responsibility and to help the Institute achieve the construction of a much bigger future. And that's what we're setting out to do. And I think it's just one small wave for me to really try to repay a debt of gratitude to Nelson that I don't think I'll ever be able to fully repay. So that's just a bit of a glimpse into my, humble journey up to this point. And going into my 16th year, it's been an incredible, incredible journey.
Well, I think if, you could ask Nelson, or say that to Nelson, that you don't think that debt could ever be repaid, I think he'd say every day you help another person learn how to take back control of their money and how to take back the banking functions in their life. He would say every day you're repaying me and every day you're helping my legacy live on. Because really, if you think about it, this is not something that most advisors are going to teach. This isn't something that the traditional financial world is ever going to teach people, primarily because just in the sheer nature of how we do it and what we do, it reduces compensation. It reduces the commission pretty drastically, anywhere between 60 and, well, I guess you could redline and go up to as much as 90%. So I don't know any advisors I ever worked with, not one, that would ever openly and just, easily just say, no problem. So that, I'll give up some of my income, 60% of my income, so that you, my client, get 60% more money to use today. Very few of them would ever do that.
Yeah. It's interesting that you would say that. I remember I spoke with Nelson a few weeks before he passed away, and he reminded me that this is all about the message, not the man. And he just always wanted me to remember that. And but by that same measure, every single opportunity I have to shine a bright light on him and his legacy, I'm going to do that. And we commissioned a great documentary film on Nelson that your viewers might enjoy. They can view that at no cost if they go to nelsonnashfilm.com. That's nelsonnashfilm.com. It's a 1-hour documentary film. There's about another 4 entire days of footage that are being curated into snackable content that we're going to get out there on the YouTube channel, the Nelson Nash Institute YouTube channel. And that content will be readily available for anybody in the advisor community to share, to distribute, to have their clients view, so you can get a much deeper glimpse into the essence of this man. And I'll tell you, I cannot articulate really the impact that he's had on my life personally and professionally.
That's amazing. It's amazing. He's had an impact on a lot more lives than I think sometimes we think. And, as everything deteriorates on the traditional investment side, as the markets are starting to show lots of signs of weakness, as the U.S. enters a recession, which we are now in, and as the banks continue to fail, this message, that maybe back, when the markets were in a bull run, wasn't really resonating with people, because they're like, oh, why would I put my money in that specially designed whole life when I could put my money in the S&P 500 or any investment and make double? It's because, first off, and I love this quote, Will Rogers says it. He says, the biggest problem in America, and I'm just going to kind of expand that, the biggest problem in the world is not what people don't know. The biggest problem is what we think we know that just ain't so. And I feel like that's one of the catalysts to everything that we do. Too many people think they know what they don't know. They literally go about life just based on, taking the information that they've gotten from one source or the other, Dave Ramsey, Susie Orman, and their advisors, and they just assume that that's all there is. And I always do the comparison, Jason, of, especially designed whole life. When I say that, I always think people understand that I said specially designed. And a lot of times they don't. They just heard the words whole life, and they got a negative mindset about that. But, the same thing is true for everything out there in the universe. But let's just use cars, because everybody can relate to a car. If I just said the word Ford Focus, you got a vision of a car, but not really exciting car. It's kind of just like, all right, it's good on gas, it's affordable, and it's just a plain Jane automobile. Some people, most people would articulate that. So then when I say, hey, I know about a Ford Focus that goes 130 miles an hour sideways in full control, has about 690 horsepower, and can do things you never even dreamed of a car doing. Sometimes they would think that's not even possible. And then I would say the late Ken Block. Ken Block, when he raced when he did the rally circuit when he was alive, he raced for Ford. And that Ford that he drove, no matter what one it was, we'll just focus on the Focus. Yeah. That car did things that no regular Ford Focus could ever dream of doing. And there was one change that was made to that car. Ken Block's car was designed and engineered to do that. Yeah. So why is it that they can do that with a car, but then people don't think that can happen with a whole life insurance policy? Of course it can. You can design and engineer it to do anything you want. And there's not one staple way you can do it. But the problem is people don't think it's possible. And people want to just like have this narrow vision. And also, I've been really, I can be quite an asshole. I'm from New York. I've earned the right just by sheer proximity to be an asshole. So I sometimes get a bit forceful on this one. Yeah. I am so sick to death, and I'm going to openly say this yet again on this podcast. I'm sick to death of people talking about the product, talking about the whole life insurance product as if that's the magic thing. That's the secret sauce. It is not. And a matter of fact, if I could just eliminate the product from the entire thing and never talk about whole life again, I'd be a happy man. Because what Nelson taught, what we teach is a process, not a product. It is a process that involves very simple things that you do every single day, except for you do them in the reverse order. You literally just reverse who gets the money. You all have car payments. You all have mortgages. You all have credit card bills. Imagine if all the checks you wrote or bill pays you did to all of those things I just mentioned, imagine if they all went back to you. That would be a pretty cool day in the office, wouldn't it? Yep. You write your mortgage payment and that check shows up in your bank account the next day. Your car payment, same thing. Your credit card payments, you would think you died and went to heaven. But then you say, oh, that's too good to be true. Silly you. Can't happen. Of course it can. It can happen exactly that way. That's why I said earlier, the infinite banking concept is the process, not the product, the process of you taking back the banking functions in your life, which is everything I just said. But people want to make it something so complicated, and it's not. It change one thing and add one step. I always say that. And why do we use this stupid whole life, as some people would say? We use it because there's no other vehicle on earth that can do what a whole life insurance policy can do. None. And I have literally gone to extensive research to try to find something else, because me and Brent joke around a lot, Jason. We have a lot of times we say, if somebody else can bring us a product that will work better than the whole life, we will change every video. We will never say the word whole life, and it will be a good thing for us. And we will use your product. That was 10 years ago. And you've been doing this even longer. Like, we just can't find another product that just works as well. Yeah, so I can't understand that, why people just want to make it about a product. That's my shop cat. If you just saw the black flash, he likes hanging out and being on the show.
Oh, that's so cool. Yeah, we have a black cat too. His name's Ninja.
Ninja. Nice. This is just lazy cash.
But in addition to what you shared, it brings up a lot of things for me that just through the interaction that you have with people in the marketplace who might approach you and say, hey, I've heard a little bit about this concept and I have a number of questions, and most of the questions primarily are all product related. And what we find that works really well for us is really taking the conversation to, let's describe the problem in your own words, and let's start there. And that immediately shifts the discussion to a much better starting point. Because unless you understand the problem, the solution just won't matter to you. And when a person describes the problem in saying, I haven't had really that much good experience in the stock market, or I've lost some money in my RRSP or the equivalent 401k in the United States. We're not really at the root of the problem. So we have an opportunity to educate, get to the root of the problem. Once that prospective client can really synthesize it and say, yeah, I grasp it. I've got clarity on the problem now. All right, well, let's go and find the best tool for the job to help us solve the problem. Because the money's got to reside somewhere. Fundamental truth. Your money must reside somewhere. And if you just set aside the process of becoming your own banker for a moment completely, and you still observe that fundamental truth that your money must reside somewhere, if you understand the attributes of this wonderful tool, this participating dividend paying whole life insurance contract, and I'm referencing Canadian attributes which share similarities to the United States. You get contractually guaranteed daily growth of cash value that can't go backward. And most people have no earthly idea that cash value is not actually money. That's why it's named cash value, not a cash account. And that growth in value is contractually guaranteed, and you pay no tax on that buildup. And you can store almost unlimited sums of money in this wonderful tool. And in Canada, it's exempt from the passive investment income tax rules. So in other words, your corporation can own it and pay for it if that's the path that you want to go down. We have a number of tax advantages in Canada for corporate-owned life insurance. You pay no tax on the death benefit proceeds. You've got ready, accessible capital on demand on your terms. I'll say that one more time. You've got ready access capital on demand on your terms. So understanding all of these attributes, let's just tap into our logic for a moment. Logically, how much of your capital do you not want residing there? Just pick a number.
I want it all.
Right? Pick a number. Like logically, how much capital do you not want residing there? Because most people in their preliminary research of the concept, they start going down the track of an either or. Should I put capital into the policy and then amplify what I'm doing with real estate? Should I do one or the other? Nelson, again, I have to give him all the credit. Understandably so. He said it best. This process is all about how you go about financing the things that you need throughout your lifetime, which can certainly include investments. This is not a function of, let's get into an arm wrestling match over whole life compared to insert whatever product here. Let's solve the problem by using the very best tool to get that job done. If you're looking at another tool, then perhaps you're looking at solving a different problem, because this is definitely the best tool to get this problem solved. And so we jammed earlier before the show, and there's many different types of life insurance products and tools and financial instruments out there. And it's not that they're good, bad, or indifferent. They each have their own set of characteristics that must be examined. And once you examine those characteristics, you're in a position of total control to decide which tool do I want and what job do I want that tool to help me get done. And if it's the process of becoming your own banker, then a participating dividend paying whole life insurance contract is the best tool for the job, period. That's it. And tends to work well. But we don't get into arm wrestling matches over things like that, because most often, if I was to intervene, if I was to be a referee in one of those arm wrestling matches, and I just said, whoa, hold on a second. Let's just take an intermission. We got water, we got ice buckets, we got everything. Let's all go into our corners. Let's each take a moment to describe the problem. sooner or later, you're either going to end up out of the ring or you're both going to end up in the same corner looking at the same problem. And then it's much easier. Nelson always said this is not meant to be achieved through argument or through convincing. He shared a story. I got to tell your audience this. He was in Birmingham meeting with a very prominent attorney. And he found himself getting into the mode of trying to convince this attorney that becoming your own banker was the right direction for this attorney to go. And this attorney just wasn't having anything of it. Suffered from stage 4 arrival syndrome. Already learned everything there is to know. There isn't anything new that you can teach me. I have arrived in knowledge. So Nelson promptly ended the meeting, indicating he had somewhere else that he had to be. Well, before he leaves, the attorney says, Nelson, just one more thing. Hey, before you go, I heard that you lend money, that you're in private lending. Is that still true? And Nelson said, yes, sir, absolutely. Nelson was quite a humble man, but he did okay. He financed an airplane for that attorney. And in speaking to the general public, Nelson would ask, what, pray tell, do you think I did with that stream of payments? I went and purchased the very thing that I was trying to convince the lawyer to buy. So he went and expanded his program, purchased another policy, and it was the lawyer's money that paid for it.
Yeah, the lawyer paid for the actual funding of his own plane. How funny is that? Plus interest.
And so,
wow.
Welcome to the world. It's, again, for folks, we see this in our private Facebook communities all the time, where people are invited into the community and their questions always begin with product. And when we ask folks, have you read this book? 9 times out of 10, the answer is no. 9 times out of 10, the answer is no. If you take this 92-page book and you spend the better part of an afternoon reading it, this book that I'm holding for all of you listeners who are not watching the YouTubes is titled Becoming Your Own Banker. If you take the better part of an afternoon to read this book, it's going to open your eyes to a whole new financial world. I guarantee it.
I'll second that.
And if you don't catch it, read it again. And if you don't catch it, read it again. And if you still don't catch it, I'm afraid there's no helping you.
I was going to say, how far down this are we going to go? Because I would say after the 2 times, maybe we need to try a baseball bat. That might work better.
If you're in New York, yes.
if only you're in New York, yes. We'll just use the baseball bat. It seems to work a little bit more efficiently than trying to get you to read over and over again when you're not getting it. We're just messing around, folks. But, it's just, I'll never forget. Jason, I don't know if you've ever heard my story of how I heard about this, but I was a financial advisor. So yeah. I was really brought up, even though the company I was at was an insurance company, I was really brought up with the notion of you sell term and you invest the difference, because being an advisor, we made a lot of money on managing the assets. And that was a big piece. So of course it made sense to sell the term, which was cheap, and then, invest the difference. And when I first heard about this, I was in Salt Lake City. And I was at Cheesecake Factory meeting with a really prominent real estate investor who, just like Nelson, lent a lot of money. And because I was a real estate investor, of course, I needed money. So I'm showing him a deal. And I just said to this guy, his name was Mike, I said, so Mike, how do you lend all this money? I thought it was a pretty logical question. And he very quickly answers. He said, well, I lend from my private banking system. And I'm like, all I heard was private bank. Okay. So in my mind, I'm thinking, oh my gosh, Mike's got some real money. This dude's got a bank. So I literally said to him, I said, so Mike, after we're done with lunch, can we go to your bank? And he proceeded to tell me that his bank wasn't a real bank. He just had a banking system he set up. He said he did what the bank does. Right. I didn't understand that. And I said, well, describe that. He said, well, I put my money in insurance companies. He didn't tell me what it was. He just said, I put my money into an insurance company instead of a bank. The insurance company pays me guaranteed interest on my money. And then he goes on, I get a dividend. And he tells me all the attributes. It's tax-free. And I'm thinking when he said tax-free, my mind as an advisor immediately went to Roth IRAs. I'm like, wait, is it a Roth? So in my mind, just like a child, when your parents described your Christmas present, your mind starts making this giant thing. And by the time you're done, you either had a tank in your mind or some castle in the backyard. And then what'd you get? Maybe you got a little electric car, you got a pogo stick or something, but in your mind, you made it something great. So I had this mental illusion, but it wasn't until Mike explained it, because I had him keep going deeper. I was an advisor, so I was pretty good about talking, money. And he drops the bomb and he says to me, so when I put money into this insurance company and you come to me and you need money like now, what I do is I take a loan from the insurance company and I give you the money I took. Right. But then he tells me, he says, but my money never leaves the insurance company. My money still sits there earning interest and dividends, like I said. So really, when I gave you the money, I didn't give you my money, but I still get interest from that money because you pay me interest, don't you? And I said, absolutely. And he said, so I literally found a way to make money twice on a tax-free basis on one side of it. And you're the one paying me all the money. And I had no clue at this point. Like some of the audience. And I'm trying to confuse the listeners right now because that's kind of how Mike did it. Now, Mike wasn't teaching, he was just using it. Yeah. And I said, so Mike, at the insurance company, what is this? And then he tells me, he says, it's a specially designed whole life policy. I clearly didn't hear the whole life, I clearly didn't hear specially designed. I only heard whole life. And it was like nails on a chalkboard, just like many people that are listening. They're like, oh, that thing. Well, that's what I thought. And I said to him, I said, Mike, listen, I've been doing this a long time. I've never seen a whole life that does what you just said. And I've never seen a whole life that allows you to put money in it and take money out immediately in the first 30 days. And he said, well, I've been doing this for a while. But he then leans into me and he says, if it doesn't work this way, then how have I been lending you money exactly how I just described? And I almost was like, touche. So then Mike, I say to him, I say, so teach me how to do this, Mike. We got some time. And he says, I can't. I learned from this guy, Brent, and we're talking about Brent Kessler, somebody we both know very well. Yeah. I got out of that restaurant. I called Brent. I probably sounded like a lunatic, like a blender with its top off, just rattling all this stuff back to him. And Brent calmly, as you know, just says to me, he says, have you watched the 90-minute video? Just kind of like Jason, how you just said, have you read the book, Becoming Your Own Banker? And I said, no, I didn't. He said, well, before we go any further, if I can ask, could you please watch the video? And it was a 90-minute video. And then after that, I will gladly book a call and talk to you and explain all this and help you with this. I did not want to watch a 90-minute video, but I did. Now, again, I just want to give you, where I was at. So I'm a real estate investor flipping houses. I had been a financial advisor up to this point of 13 or 14 years. When I sat down that Sunday with a big old cup of coffee and hit play on that video, many of you, all you heard was 90 minutes. To me, the 90 minutes, it felt like it was like 3 minutes. I don't even know what happened. It was almost like I went into a time warp, but I didn't because I had 4 pages of notes. And by the end of that video, I had seen something. It had just snapped. It was like my brain all of a sudden saw something I'd never, ever seen before. And it was crystal clear what my path was. And that was the moment. It was 2014. And I have never, ever looked back. I started using it. I wasn't teaching it. I literally was flying Brent out to my facility to do presentations to all my real estate buddies. And he was cleaning up and I was sitting in the back of the room watching this. And I'm an advisor at this point. And I'm like, holy crap, I've never seen something like this. He just did this 90-minute presentation, which I thought these people were lost. I thought they were bored. And then he said, if anyone's interested, give me your name, your number, and your email, and I'll set up a call and help you get started. The whole room stood up. And I'm like, whoa. And that's how I started doing this. And it wasn't until I retired from the financial world that I really started doing it. Cause it was just in the financial world. It wasn't really something that the companies I was associated with at that time really supported, and nor did they really want to support it. So when I left, I started doing this. So, I didn't mean to go long on that, Jason, but that's how I heard about this.
Yeah. It's, I love hearing people's journeys, and I've talked about this before, and I'll tell you, for folks in the advisor community who I'm sure you get contacted as well. We get contacted often from advisors who say, hey, I have a client or a group of clients who have been bringing up this topic, and I'd really love to learn more about it. And my first question always has been and always will be the same. Have you read R. Nelson Nash's book titled Becoming Your Own Banker? No, that's your starting point. If you catch it, great. If you don't, as long as you leave happy, that's okay too. And it, over the past 15 plus years, I haven't had a single client ever call me and say, Jason, I'm really pissed off that my cash values keep rising every day. It's really bothering me. Having ready access capital to take advantage of high caliber opportunities, boy, that's a real frustrating thing. And when you're in a position of total control, what a peaceful, stress-free way of life it is. You've got a great opportunity. You've got ready access capital. It's just a peaceful, stress-free way of going about things financially. And all the noise that goes on out there, Nelson used to say in his talks, he would say, hey, have you ever flown on an airplane using a noise cancellation headset? A lot of people in the crowd would say, yeah, we've done that. He says, aren't they just wonderful? You just get on the airplane, put the headphones on, push a button, all the noise is canceled out. He said, what your clients need is a financial noise cancellation headset. Oh God, I tell you, I miss the guy a lot. And he just had such an amazing impact. But, the point is that you're going to need to use some money for the rest of your lifetime. You're going to make financing decisions with every transaction that involves money. Do you want to be in a position of control as it relates to that or not? It's ridiculously simple in the sense that the message itself, the concept itself, it doesn't need to be sensationalized. There's a lot of content out there and a lot of sensationalizing going on. And I find that the clients I most love to serve are the ones who just don't pay any attention to or buy into any of that sensationalism. It's completely unnecessary. It doesn't matter what's going on in the economy. It doesn't matter what's going on in the real estate cycle. It doesn't matter what's going on with political turmoil. It doesn't matter what's going on with interest rates. The process of banking goes on no matter what. You have to reckon with that. You either want to control that function as it relates to your needs or you don't. That's it. And it's not about the how. It's about having the right who that can show you how to get the how done.
That's very true. Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up. And a lot of us, have come to be very attached to these things, cell phones, right? But let's not talk about cell phones. Let's talk about specifically the iPhone and a company by the name of Apple. Everything we're talking about is control here, control of your money. But, Steve and, well, not so much Wozniak in the beginning, but we'll just focus on Steve Jobs. He had a vision of end-to-end control. He hated it when he started working on Apple, and Woz wanted it all to be, not so much just a free thing, but Woz wanted everybody to be able to go in and change what they designed. Yeah. Steve said no. And when Steve finally got back in the realm, in the helm of the company, he did make it so it's completely closed. Okay. It's controlled. And that, what he did with Apple and what he did with all the technology we use. I mean, come on, nobody can say that an iPhone or a Mac is difficult to use. It's because they controlled the narrative. They controlled the outcome. So when we talk about the infinite banking concept, that's really what we're talking about is control, end-to-end control. You control every aspect of the transaction. And I draw it a lot. It's just a circle. Yeah. If your money starts on the left, and let's just for today call that your bank. Okay. Because it really is. Now, some of you are like, it's not a bank. It's a specially designed whole life. Okay, call it what you will, but we're just going to say that this is your bank. If your money and your capital started in your bank, and just like you said, you had immediate access, you had control. It's just you push a button and you have it. Okay. Then our goal is not to leave the money in the bank, because if banks just put all the money in the vault, would there be a bank alive anymore? No, they can't. Banks don't just sit on money, and banks don't do what we've been taught to do with money. Banks move money. So if we're going to be a bank, we got to mimic a bank. So we're going to move that money around the top part of the circle. Just envision a circle. All we're doing is money changed. We changed where our money was going to be held. Now it's held in an insurance company with a specially designed whole life. And we're going to then move the money around the top part of the circle to the right side. Okay. Now on the right side, let's just draw a box there and let's just call that opportunity. And what our goal is to find places for our money to go. Now, opportunity is super easy for most people because most people have car loans, they have credit card loans, they have line of credit loans, they have mortgages. So let's just start there, because the fastest way to wealth is to start right with where all your money goes. Let's just take back the money that we're giving away. So we slowly start taking money from our bank and we start replacing the money that we have with their bank. And we pay off loans slowly but surely. And as we pay loans off, now we went over the top part of it. And how you're always going to do it is lowest balance to highest. Then whatever money we pay off, remember, we used to give that money to somebody else's bank, but now we don't owe their bank anymore. This is what you were talking about with that mortgage, where Nelson was like, well, hold on, not so fast. You committed yourself to a 40-year mortgage and you're going to stick to that 40-year mortgage. But now what we're going to do is we're just going to change literally the name on the check. So if you used to write a check to the credit card company or the car loan or the mortgage, change the name on the check. Now the name becomes your name. And now what we do is we pay. And this sounds weird to people because they're like, well, that's weird. It was my money to start. Yes, but not really. The money moved over there to the opportunity zone where it paid off a debt. You then took the amount you were given that debt and you take it around the bottom part of the circle and it ends back up in whose bank? Your bank. But you see, the difference is when you were paying their bank, you couldn't just call Jason. What was the name of your mortgage company that you used to have?
TD.
TD. Oh, okay. Yeah. So we all know TD. So when you were making monthly mortgage payments to TD, could you call TD the next day and be like, guys, I screwed up. I kind of need that money. Can I please have it back? I need to use it for a little bit.
Not a chance.
Not a chance. But when you make the monthly payment for your mortgage back to your bank, can you look at yourself in the mirror and say, hey, man, I screwed up. I need that money for something today. And in the mirror is just a reflection of you. And you smile and you say, sure, how much you need, how long you need it for, and how do we want to structure the terms? You controlled every aspect of what I just described. Nobody else was in the middle of that except for you, because you were the bank. You controlled the terms, you controlled the flow. But the one thing that also happened is you never, ever lost control of the interest earning potential of your money. You see, this is where I didn't really go. Your money never stopped earning interest in that entire process. You see, the insurance company kept paying you interest. And this is where it gets technical. You got to design it properly. But how cool would that be if today you put money into a vehicle, a machine, where it's the specially designed whole life, and then that machine for the rest of your life until the day you die continuously paid you interest and hopefully and more than likely paid you dividends as well, because they've never not paid dividends. So why will they stop in the future? Wouldn't that be cool? But wouldn't it even be cooler if you could take that money and use it for other things, but never stop earning interest and dividends? Now, this is the part where people are like, that sounds too good to be true, but it's not. And this is the thing. You know, we talk about the product. They love the product because they earn interest and dividends uninterrupted, but it's not the product that made you rich and wealthy and changed your financial future. It's the process we just went, the circle. That's all that mattered. And when you run out of debts, it's kind of a rough day because you're like, oh my God, what do I do next? Well, that's where you become the bank. And banks, everyone I've ever seen is in the business of lending money. So then you start lending money and you just find, what do you want to lend on? I always lend on things I know, like, and understand. I lend on real estate. Why? Because I know, like, and understand real estate. Nelson, in that example with the attorney, lent on airplanes, but Nelson was a pilot. He understood airplanes. He knew whether it was a good deal, a bad deal. He knew how airplanes work. He knew how they depreciate, and he knew how to control the risk by lending on an airplane. Now, me, I don't. I like flying on airplanes, but I don't know the darn thing about how to value an airplane. So I'd have to find somebody that's a specialist in that And then they could teach me how to lend on airplanes. But today I lend on real estate. And that's solely because I follow the laws of wealth. And the law, the one law, third law, says protect your wealth. And the best way to protect your wealth is to only invest or do things that you know, like, and understand. I mean, that makes sense for everybody, right?
Oh, absolutely. Yeah.
So that's all this is.
You know, I'll tell you, one of the things that routinely comes up for me just in my thinking and how I'm sharing a conversation with somebody about this process or speaking, to a group, is that you would not live for very long without a heart. And years ago, Nelson had to have his heart replumbed in 4 different places. So they had to take his heart out of his chest cavity. And he said, this heart and lung machine was keeping me alive. And of course, I don't remember the surgery. But what I do know is that, yeah, I was alive, but I wasn't really living. I was just existing. When they put that heart back in my chest cavity and sewed me back up, and he was awake and cognizant of what was going on around him, he immediately began to think about how most people in North America, if we just take Canada and the United States and we say most people in North America, as it relates to their finances, they're doing the equivalent of living off of a heart and lung machine. They're not only abdicating the responsibility of banking and that function as it relates to your needs, but they're more importantly abdicating the opportunity that it represents to control it. And so if someone else is performing that function as it relates to your needs, that's the equivalent of living off of a heart and lung machine. And so much like blood circulates through the body and the heart pumps it to the organs and the parts of your body that need it the most, that's what you get to do when you begin to assume control over this process. You're pumping that financial energy to where it's needed the most, and you're the one that's controlling it. I cannot tell you the last time that I ever referenced a policy illustration in any talk that I've done for years. There's no necessity for it. I've been speaking in Canada for many years to coast. Began speaking in the United States in January of this year. I haven't done a single talk yet in the United States, not one, where people in the audience approach me and say, nobody's ever explained the concept to me this way before. I thought that I was going to be sitting through comparison to this, comparison to that. Here are the numbers. Here's the history of the insurance company. Here's the dividend scale interest rate. Here's the internal rate of return. All this noise, just majoring in the minors. We just hosted a family banking summit in Toronto, Ontario, Canada. We had several hundred people there. My children presented at the summit.
That's
my
awesome.
daughter, Charlotte, one of my twin daughters, she's 10 years young. She walks on the stage and she says, what did the football coach say when he walked into the bank? And everybody in the crowd goes, what? Give me my quarterback. and then she goes on to tell a story about how important it is to repay policy loans that you access from the family banking system. She's 10.
Wow.
Not one of my kids has ever asked me, can you describe to me all of the attributes like internal rate of return, dividend scale interest rate, how many years has the insurance company paid dividends, all this nonsense. Not one of my kids has ever asked me that, but they can all sit down and describe to you the importance of family banking and the importance of keeping the money in the family and the utilization of this wonderful tool called dividend paying participating whole life insurance. My son, 14, is talking about the importance of having the right who to help you get the how done, having a great coach, something that you and I share very similar values on, the importance of coaching, but coaching a client to become independent. so that they're actually practicing based on the two most important words in the title of this book. They're right there.
Your own.
Nelson didn't title it Becoming Your Own Banker, provided you have an advisor alongside you to guide you through every step of the process. This is about you taking control of it. The advisor is there to coach and mentor you, but the advisor is responsible to you, not for you. And so these kids are on a stage sharing this with a room full of hundreds of adults. The adults loved it. The kids pick up on this much faster than adults do because they haven't been polluted with all of that other financial noise that goes on out there. And so when we move away from all of this noise and we focus on solving the problem and helping people gain clarity on the problem, once you present the solution, they know exactly what to do. And
it so is funny
to hear that feedback once, I would have thought, okay, well, that's interesting. Thank you for letting me know that. What specifically was different about what you've heard in the past compared to what you've heard now? 3 times is a revolution for me. Every single talk I did, people approaching me. Nobody's ever explained it to me that way before. Okay, great. So what are your insights? What are you taking away from this? It's just so interesting to hear what people are thinking, provided that we ask. Describe to me the problem in your own words. Take all the time you need.
I love it. I love it. And everybody, a lot of people are like, well, when you get to a certain amount of wealth, you don't have any more problems. Sure you do.
Oh my God, they get amplified.
They get amplified. But I've never met anybody with money, whether they're any level of rich or wealthy, that hasn't wanted to make more money. But a lot of people, they struggle with that. And I probably would have too at one point or another in my life. They struggle with, when people ask me, when is enough enough? When, what's enough money to you? My answer is never going to change. More. That's always the right answer. More. Because I don't view money the way that they do. They view it as a necessity, as a scarcity element. I view it as a tool. Yeah. Okay. I view it as a tool, and I make beautiful gardens with the tool, and I can make more gardens the more tools I have. So the other thing I always explain is, and I'll take one from Brent Kessler. He says, I've never seen a poor person putting wings on a church. In other words, if the way you look at money as a tool, and the way you look at it is more, and you look at it as more because there's more to give and more people to help and more things to do to make it a better world, a better place, and just a better environment for so many people, then all of a sudden the true answer is always more. Because when you take yourself out of the equation and you start, I don't care if it's, you read the Bible because it talks about it in the Bible. The goal is to give. If you listen to Zig Ziglar, if you help enough people get what they want, you'll get what you want. It's not about what you want, but if you just help people, you always get what you want. Jason, I think about everything we do and our teams do. All we're doing is giving. We're giving people a choice to then take back control of their money and then apply, just change one thing and apply a process. And in doing that one thing, we are giving the ultimate gift, because we are literally putting them back in control of something that they've never been in control, but they don't think that, but they truly haven't, because they've always put their money in the bank, which is giving up control. They put money in 401ks, giving up control, put money with their advisor in Wall Street, giving up control. They've always been taught to do that. And it's always served somebody else. Somebody else has always made their money that they worked for work for them. And that to me is sick. And I didn't understand that. Even all the years I was an advisor, I didn't understand, but I certainly do now. And my daughter, now she's almost 3. She'll be 3 this month. My daughter, like your children, will never understand the way that people use money. She will only know what we know, and she'll only know how to be her own bank. So when her friends, and I dread this day, when her friends start talking about the way that their parents use money, my daughter is going to, well, I'll prepare her for this, but she will be so confused, and she will not understand why anyone would ever do what her friends do or her friends' parents do. Yeah. And that's going to be a difficult realization. And then the hard part's going to be, she's then going to want to give. She's going to want to tell them, oh my gosh, you should do it this way. And then she's going to get the pushback. And, because we can't force this way of thinking on people.
That's right.
All we can do is we can show them the way. You've heard it all before. You can show the horse to the water. You can't make it drink it. We can show them the way. And and some people are going to get it right away. And other people, it's going to take some time. And some people, they're just never going to come around to it. But it doesn't mean, no matter what dynamic it is, that we should ever stop giving. We should constantly keep trying to show people the way, because we now know what that difference has been for our lives and all of our clients' lives. Why would we ever stop because somebody says, oh, that's stupid. Oh, that's a scam. Oh, that's never going to work. Oh, that whole life stuff is crap. Why would you ever pay yourself back when you paid your mortgage? You paid the mortgage off. It was your money. You paid it off with. Why would you ever pay yourself back? That's stupid. Stupid is as stupid does.
Yeah, it's real estate. Yeah, what an interesting world. Control.
I got to hit one more thing.
It's all about equity. It's all about the location of the equity. That's what it's about. It's about the location of the equity. And I'll share, if I may, just a really good book recommendation as well is Joe Polish wrote a great book titled What's in It for Them. And Joe Polish, if your viewers and listeners aren't familiar with him, they have an opportunity. He founded the Genius Network, which I'm blessed to be a part of. And he's one of the best connectors and givers that I've ever met. And one of the things that he shares is that your give should always be bigger than your ask. And what an incredible way to go about things as it relates to developing, nurturing relationships, being of service to other people. Make sure that your give is always bigger than your ask. But that book titled What's in It for Them, I would wholeheartedly recommend it to any of your viewers or listeners. They will love it.
I have not read that one. I've heard it mentioned, I think probably by Brent or maybe by you, because I've seen you speak several times. There's just so much to unpack, but it really is like so simple. There's nothing hard about this.
Nelson Nash said it best. The infinite banking concept is not meant to be sensationalized. It is ridiculously simple. But I can assure you, the more that you see infinite banking concepts, plural, the more you'll see you didn't see.
Wow, I've never heard that before.
The more you see infinite banking concepts, the more you'll see you didn't see.
Wow.
Something to think about.
That is something to think about. And we were just talking about something yesterday on Ask Me Anything, one of our shows where people can just ask questions. And, one of the attendees just brought up this scenario. And it's exactly what you just said. He laid out something we do every day. And I'm like, I'm kind of like, just, all right, here we go. Great. Drew, you got it all figured out. Then he takes it an extra step that I'd never heard anybody do. And then he had just asked, he said, does that make sense? I said, that makes perfect sense. And I can't believe I never saw that before. But there you go. Just yesterday that happened.
Brilliant.
So Jason, being up in Canada, I just looked at the time. I can't believe how fast time goes by.
Yeah, it went by.
By being in Canada, like, is there any big differences that the audience needs to know about? Wow. And how this works there?
Yeah. Excellent question. It's the tax treatment of participating dividend paying whole life contracts is different in Canada than the United States. In particular, if you're borrowing from the life insurance company and the loan amount exceeds the cost basis of the policy, you trigger a taxable gain, but you trigger a corresponding tax deduction dollar for dollar as you repay that policy loan balance. The corporate owned and corporate tax treatment is much different in Canada. The whole notion of, a capital dividend account, and something that viewers and listeners, if you head on over to our podcast channel, Wealth Without Bay Street, we have a lot of great episodes there that describe those nuances so that people who run established businesses understand how they can implement this process, have it be corporately owned, which Nelson would have never suggested.
No.
Nelson would have said the corporation should not own this. And when we walked through these nuances with Nelson while he was still with us, he said, hey, you've got to work with what you've got. And so that was the sort of the marching orders that he gave us at that time. But outside of that, the contractual guarantees are very similar. Like in Canada, the total cash value is contractually guaranteed to match the total death benefit by age 100, which used to be the same in the United States.
Yeah, we're living longer here, I guess, or at least they hook us up to machines.
Well, it's just
us alive.
Yeah, for all of you folks out there, we're going to use a little bit of technical trivia here, but the how they update their mortality tables, and they're a little bit different than the US, but the process itself doesn't recognize any borders. Nelson didn't release a Canadian version of this book. The process doesn't recognize any borders, but the tool, it's really important that you're working with, someone who's very familiar, has a high degree of expertise as it relates to the tool, because there are some things that a person needs to be aware of. And the best way to become aware of it is to have a conversation with somebody who knows what they're doing. And our team, with all due respect to a number of great colleagues in Canada, there are a number of great people that don't work with our organization that do a wonderful job. But, I think our team is the gold standard, really, in educating the general public about this concept. And that team is Ascendant Financial, and we operate coast to coast. We serve Canadians from one side to the other. And we've been doing this now. This is all that we specialize in. We're not generalists. We specialize in the implementation of this process with our clients. And we just became a managing general agency in January of this year, which anyone in Canada who's in the industry will understand the significance of that achievement. And so we're actively seeking great people to join our team, and they can still operate independently and run their own, agency, but have their license held with our MGA. And we're the only Canadian MGA that specializes in this process.
That's so awesome.
Isn't that good?
That is awesome. I mean, because that just makes you the heart surgeon of Canada in this entire industry.
All the credit to my teammates, Chris, honest to goodness. And I'm not placating, or I'm not blowing smoke up anyone's rear end. That is the honest to goodness truth. Like, my teammates enable me to operate in my unique ability, and they're the team members. They're the ones that really make it all happen. And if things weren't going well, that's on me. But all the credit to my teammates. It's richly deserved. We have such an incredible team of people, as evidenced by, gosh, I lost count of the hundreds upon hundreds upon hundreds of detailed. I'm not just talking a rating. I'm talking detail from people leaving these Google reviews. And we get asked by advisors all the time, how do you get so many Google reviews? We ask for them. That might come as a bit of a shocker, but we ask for them because we want to be continually developing a deeper understanding of what the clients we have and the clients we want to have truly value. And then we set about delivering that. And advisors typically come into the industry with a notion of what clients value without ever asking them.
That's true.
And so we're asking that all the time, and we're technically innovating. We're serving the people. That's our most important number. It's not first year commission credits. It's not premium placed. It's people served. And that in and of itself completely changes the way that our teammates go about their day-to-day great work, because it's always informing that most important number, people served.
My wife just yesterday asked me a question. It was kind of caught me off guard. She asked me, she said, Chris, I shouldn't probably even have to ask, but how much money do we make? I didn't have the answer at all. I literally would have to go in and look, and we keep really good books, but I got a bookkeeper and I didn't know. But, if she asked me how many clients we have today, I can give her that number to the T.
There you go.
Because I know how many lives we've served. I don't care how much money we make, because if I serve and I give, then I get. The rest just takes care of itself. It's like an autopilot. Like, you don't have to fly the plane anymore. Like, all you have to do is give. It's
all day long. Chris, this was fun.
This was fun, Jason. And we're going to put that information. Folks, check out the podcast. I have an episode on there as well. Wealth Without Bay Street, which is just like in the States, it's Wall Street, but in Canada, it's Bay Street. So that's how you remember it. And also check out Ascendant Financial. We'll put the link on there so you can look at everything that his firm and his company does. You can learn how much they're giving. And if you're in Canada, you should never, ever, ever speak to anybody else. So Jason, we'll get them going for you and keep doing what you're doing. Serve, and keep passing this message on. Folks, thank you all for joining us for another episode of Money School Podcast. We'll see you next time.